Hello and welcome to Crypto Weeklies. In this video, we are going to discuss Bitcoin year-to-date ROI, conduct some of the machine learning-based price forecasts for Bitcoin, and also accumulation strategies as well as estimated bull run target. None of the content is financial advice. Let's get started. This is the year-to-date ROI. Again, all of the content available on cryptoweeklies.com. You don't have to sign up or pay for anything. Link on the bottom of your screen. In this ROI section, you will find Bitcoin year to date ROI for all of its years of existence. Um, this particular year to date ROI trajectory for 2024 is closely following 2023, at least at so far into the year. Now that almost 10 to 11 days are left for the completion of 2024. The similarity in the trajectory over the last 2 years helps understand that there has been some seasonality in Bitcoin, specifically during January. Again, there have been some cool off period. Then again, during March, there was some significant rally around that point in time. Then again, a sideways action till about end of August, and in the last quarter or so of the year, that's when Bitcoin usually takes off. That has been the case for the last 2 years. But if you look at in the post halving years, that is what is potentially in 2025, and compare that with 2021, over here, the moves that Bitcoin made aggressively first 8 days of January, they kind of helped establish what Bitcoin would do in the remainder of the year. Again, 2017 is a different post halving year, where most of the gains happened after September of 2017, that is. But in 2021, most of the gains happened around January February, where the year to date ROI at that point in time was higher than uh, at around December of 2021. So again, the first 2 to 3 months were the key in the last post halving year. So potentially January to April of 2025, if we were to extrapolate some seasonality from the last cycle, should theoretically be a key level to watch. Again, 2020 and 2024 were kind of similar to a point. Again, you can see this was the blue line is 2020, how Bitcoin performed in that halving year versus in 2024 how it is performing. Again, lot of similarity. Again, some excitement during February March time period for Bitcoin, again when it started to make its all time highs in 2024, whereas in 2020 this crash corresponded to the March 2020 crash. Again, that was once in a 100 years or so event. But again, if you tune out that part of the market cycle, or that part of the year of 2020, you could see that most of the year, uh, Bitcoin in 2024 has followed what it did back in 2020. Again, the exceptions being again in the last week or so of 2020, that is in the last 2 weeks of 2020, that is starting December 19th of 2020, whereas in December 18 19 of 2024 there has been some sort of a dip. But if we manage to close 2024 in a similar fashion, with again a muted version of 2020, where there is one more additional peak towards the end of the next 2 weeks, then again the comparison between 2021 and 2025 makes most sense in that environment. Again, the year to date ROI for Bitcoin in 2021 was at around at the highest year to date ROI was at around November time period, when Bitcoin eventually made its to 69k peak. Back then, the year to date ROI was at around 130%. Right now, price of Bitcoin is at around, over here we can check uh, Bitcoin USD price, $97,300. Again, there was a slight dip over the course of this week. But again, if we look at let's say a 90k Bitcoin or 100k Bitcoin during the end of year 2024, 130% gain from that point in time would be at around on 100k would be at around 230k Bitcoin sometime in 2025. Whereas again, if there are some diminished version of those peaks from cycle to cycle, so for example 2021 was very different from 2017. The gains in 2021 were far less than the ones in 2017. So accounting for some diminishing return, that threshold between 60 and 80% year to date performance for Bitcoin in 2025 would still put Bitcoin between 160k and 180k towards to at a point in time in 2025. Again, taking into the consideration the seasonality aspect, that could be either in the first quarter of 2025 or in the fourth quarter of 2025. So with that, again, we can briefly look at what our machine learning based model says could happen as a part of our forecasts models for Bitcoin going 6 months into the future. Again, this is in a non-euphoria environment, again at one standard deviation bull case scenario for Bitcoin for the remainder of the year of 2024 and till about May of 2025. That journey is forecasted is between 106,000 and 160,000. That is again without any blow off top uh, per the machine learning model. The directionality of this forecast, again this is the pink line, which says that devoid of any bearish or bullish narratives, the likelihood of price action for Bitcoin is likelihood of Bitcoin trending higher with time is higher than Bitcoin trending at a lower price point with time. Again, historically speaking, you can see that the price of Bitcoin, again even the lows that it makes in the bear market are higher than the previous bear market lows. So that is not a surprise. If on the other hand Bitcoin manages to have a euphoria case, that is in a bull market where the two standard deviation scenario pans out, again I'll explain with the regression analysis later. In that case, the machine learning based model says that the price could be between $111,000 and about $215,000 for Bitcoin in 2025. In a bear case environment, the price again in a non panic bear case would be between 83,000 and 95,000. If on the other hand, if there is a full-fledged bear market in 2025, the floor for Bitcoin is between 58k and 91k. I would imagine that for a lot to go wrong in the market if that case were to pan out. Again, that usually two standard deviation bottoms usually happen in the bear market. Again, that is in the years such similar to 2018 or 2020 2022 and potentially in 2026. So again, but nonetheless, it's always a good idea to be prepared for all the potential scenarios that market could throw at us. And with the regression based approach, the valuation for Bitcoin, again still this polynomial regression based pink line helps establish the bullish and the bearish phases of the market with a clear cut demarcation of this based on this polynomial regression function. Per this analysis, the price of Bitcoin is right now slightly overvalued based on the line in sand, which is this pink line coming in at around $92,000. Again, right now the price is at around 97k. So if on the other hand, if there is a one standard deviation peak like Bitcoin achieved back in March of 2024, back then that one standard deviation peak was at around 75k. Now that one standard deviation peak for Bitcoin is at around 146k at this point in the market cycle. Again, this function has a growing trend. That is because Bitcoin's price has been trending higher with time. Again, especially you can see that the upswing usually occurs when the bear market gets over. Again, this upswing started some point in May of 2023 when the price started to trend up with time at an exponential pace. To capture the market cycle peaks of Bitcoin, as we discussed earlier, the two standard deviation peaks usually, that orange line that we discussed in the machine learning based price forecast, usually it provides some guidance at what Bitcoin could do. Again, one could still say that again this two standard deviation peak might not be reached, because again over the multiple course of market cycles in 2017, Bitcoin went to this three standard deviation peak, and it also exceeded that, whereas in the 2021 market cycle went only barely touched the two standard deviation peak. One could make a case that in this upcoming market cycle Bitcoin could only go as high as this one standard deviation peak. But again, in this scenario also, the one standard deviation peak has a growing function. That means that one standard deviation ceiling right now at around 146k could be extrapolated at least 6 months into the future with some accuracy. Again, this is again not a fruitful endeavor, but nonetheless what we can do is again use this regression line, the one that we drew at a weekly level, on the daily level, and try to estimate what that week regression line would be. Again, this is the fair value, which is the pink line at around 185k, and applying two standard deviation residuals on that point, and then again extrapolating that to 2025, mid of 2025 would give us about 446k. But that is two standard deviation ceiling. Again, one standard deviation ceiling would be somewhere between these two values. Again, if we took 185k and 240k or something, or change, a midpoint would be somewhere at around 300k at for that one standard deviation ceiling. Again, that is just an extrapolation. The best way to analyze is what this current valuation looks like, and again with some extrapolation. Again, we tried to do that, but again it's not that easy to use extrapolation techniques on a polynomial function. But again, if you could join the dotted line, those could meet somewhere at around 200k. With that, again, that would be one way to forecast what Bitcoin could do in terms of the estimated bull run peak, as a combination of all the models that we have, and the current price, and just an expected value based risk reward analysis. The estimated bull run peak for Bitcoin at this point in time is at around 195k, representing a reward of about 2x from the current price. And also the current SMA risk for Bitcoin again has cooled off a little. Again, you can see in back in November and December, Bitcoin did go and visit the highest risk band, or between zero 0.8 and 1 risk, and then came back sharply to this high risk environment. Again, the best time to DCA is per this model. Again, this is one of the many models, but again, at least avoiding any short term bubble risk is when the normalized risk is, let's say, less than 0.4, and even more conservatively less than 0.2, that is less than 40% risk or less than 20% risk. We spent a lot of time in this environment in starting June till about November of 2024. Right now, again, in the high risk environment, again the polarity is trending down. That means the risks are going down with time. Let's see how this pans out. But again, most of the DCA, at least personally speaking, based on this approach as well as the DCA model approach, did identify some of the best time to DCA Bitcoin. Again, personally speaking, whenever the risks are less than 30%, that's where DCAing made the most sense for me personally. That happened starting September 2022 till about March of 2023. In the cycles, in the coming cycles, even the risk threshold could be upped by about another 10%, personally speaking. That is because as the adoption of Bitcoin increases, the likelihood, the downside risk kind of diminishes, and that can be evidenced by the percent drawdowns, the change in percent drawdowns from 85% or so over the last two market cycles, whereas in this market cycle the drawdown was only 77%. So again, at 40% DCA risk, we spent about a couple of days or so in October of 2024, when the price of Bitcoin was at around 60k, and even in September, when the price went close to the 50k level. So that's where the price is the price based risk is right now. Again, the current risk levels are, I think, somewhere between 50 to 60% based on the current price action at around 57%. So again, kind of in the middle of the bull run. And in terms of the bull run completion in itself as an analytics, uh, right now, again, this was as of December 15. But if you check yesterday's bull market completion related analytics, it says less than 50% is completed at around 46% of the bull run is completed at this point in time. We did spend about 4 days in this high risk environment, again color coded in orange color, and also before November 5th, spent a couple of days in the low risk or lowest risk environment, when DCA made the most sense per this model. um, and this market has been volatile, especially in starting the third or fourth quarter of 2024. You can see but this is the composite risk score, again available on crypto weeklies under this peak valley analytics. This helps us identify at a 50,000 feet level what is the market doing based on the top 100 cryptos and their risk journey from 0 to 1. Again, typically when the bull market is completed, the risk levels are higher than 0.8. That means 80% risk. Right now, on December 15th, it was 57% risk. But this is not a linear journey. There are dips along the way, and those dips do represent some of the best time to DC. Again, this is not financial advice, but again, we haven't changed the risk regimen from this moderate risk to low risk. Again, that would happen when the risk levels when and if the risk levels go below 40%. We are at around 46%. Personally speaking, I'm waiting for this to cool off to at least this green zone, to look at some of the potential entry points. And with this, I would like to conclude the video. Hope you enjoyed the content. If you did, please subscribe and also give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.